In today's video, we're going to talk about what Michael Burry just did. Is it time to buy the dip out here in stocks, or should we hold off? This week is going to be action-packed with lots of volatility in the market, and what Trump just said could move this one market substantially. Last week, we saw a lot of volatility in the market, and Nvidia on Friday was actually able to close up 78 cents. If you guys remember, on Thursday, Nvidia was down over 6.5% at the low, and it closed relatively high on the session. Now, is this a sign that we're going to start to see stocks bouncing this week? We come over and we look at this chart right here. This is going to be a chart of the SPY versus HYG. Now, think about HYG, high yield grade bonds, as smart money. And as the S&P has been going down, what has HYG been doing? It's basically consolidating right up here, looking like it's primed for a breakout. So was the move down this week? Nothing more than shaking out some of the weaker hands. Then we come over and we look at the Dow Jones versus the transportation index. This is where it starts to get a little bit dicey. We can still see the transportation index on the bottom keeps making a series of lower highs, but we saw the Dow Jones basically right up here near all-time highs in the market. Now, will we see the transports this week starting to firm up, potentially going higher? Because as we look at the yield curve, we know it's been inverted for quite some time, and this red line right up here basically signals when the yield curve will uninvert, and that's normally when we're in a recession and bad things happen out here in the stock market. Now, if you're thinking about buying the dip, this news article from MarketWatch says, never mind the post-PCE stock rally, it's not yet time to buy the big tech dip, that strategist says. Well, if we look at some of the big tech, we already talked about Nvidia. Nvidia is showing signs it may want to firm up. We come over, look at SMCI. SMCI was actually able to take out the high from Thursday. However, it closed with a doji candle, but still eked out a gain of 2.38%. Well, what about Microsoft? We come over, look at Microsoft. Microsoft made a new low on Friday and then came right back up. Microsoft closed up 1.64%. But when we look at Microsoft, this is where things start to get a little bit dicey, because this could be a larger A to B equals C to D pattern, and that gives us a price completion at 412.21. Now, if we're going to make it down there, does that suggest that we're going to see the indices also starting to trade a little bit lower, maybe sweeping the lows and trying to run some stops? We saw Meta out here up 2.71% on Friday, able to take out the highs from Thursday. Now, one thing to note with the indices and a lot of stocks out here, we have several gaps above us that could potentially come back and get filled. Let's take a look at Google this week. Google on Friday made another low, came down to the 127 Fibonacci extension level. But when we look up, what do we have? A big glaring gap above us. We have some high volume nodes on the volume profile. The first one being about 173, the next one up here about 177. Now, unlike some of the other stocks, Google did close in the red on Friday. Now, let's talk about one of the many catalysts for this week that we're going to discuss. This week, if you look at this chart, we have a lot of major players out there with earnings. This week is going to be action-packed. On Monday, we have stocks like McDonald's. On Tuesday, we have PayPal, we have AMD, we have BP. On Wednesday, we have Meta, we have ARM. Then on Thursday, we have Crocs, Intel, Apple, Amazon. And we look at the big movers expected this week. Look on Tuesday, PayPal and AMD plus or minus 9%. Starbucks plus or minus 8%. On Wednesday, ARM plus or minus 12%, which we're going to go and take a look at that stock here in a minute. Meta plus or minus about 9.5%. DoorDash on Thursday plus or minus 12%. Amazon plus or minus 8%. So again, this week is going to be action packed. And if we come over and look at ARM, we see ARM on Friday was able to break the high from Thursday. However, it closed slightly down 14 cents. One thing to note though, we came right into the minus development area on the composite profile. Normally when we come in this area, the first time we come into it, we reject and we start coming back out. And look, we have a recent gap up here at 157.78. We also have a high volume node up here at 163.76. Both of those are going to be key levels, but something that is a little bit problematic if you're looking for a big turnaround in ARM, and that would be if you look at the MACD indicator, clearly angling to the downside at about a 45-degree angle. We have a bearish separation of the two lines. Now, that doesn't mean that earnings can't destroy any chart pattern that we're looking at out there. So again, we do want to pay attention. Do I think ARM could potentially go higher? And I do think there is a chance that we get a bounce in the markets this week. We come over though, let's talk about some more volatility before we go ahead and talk about what Burry is doing and what Trump said. And this is very unfortunate. We want to pay attention. Israel could be back in focus. If you guys watch the news, very devastating at what happened when the kids were playing soccer. You guys can see the news article right there. My hearts go out to anybody that was affected by that. And for the kids out there, this could cause more uncertainty in the market. You know, nobody wants to see things escalate more. If you guys join me during the live stream, we know what happened when Israel went on the offensive against Iran. We had a major movement in the stock market that night, and the market did come back and recover. We come over and look at what Michael Burry is doing. Michael Burry goes on a big tech selling spree, major economic warning. I don't know. We know Michael Burry is always very bearish. If we look at some of the stocks that Burry has been selling, Oracle is one of them, CVS, Google, Amazon. Now, Google and Amazon, that could be problematic. They are both in the NASDAQ and they are tech heavy stocks. So does Michael Burry know something we don't? Is Michael Burry going to be jumping back in, or is he just early to the party? Is he trying to front run what could happen after the election cycle? And if we come over and take a look at Amazon real quick, Amazon has also suffered a drastic pullback from all-time highs. If we measure all-time highs down here, Amazon's down roughly 12%, but look at the MACD indicator. It is below the zero line. We still have a bearish separation of the lines, but it's looking like it's starting to try to base out here a bit. On the 4-hour chart, we almost have a cross of the two lines. So that could also lend to the case that we could potentially get a bounce out here this week. I want to make everybody aware, Apex 7 a massive 80% sale off all their valuation accounts, pass in as little as 1 day, and you can also get a 150K account for only $40. You get a 250K account for only $40, and you get a 300K account for only $40. So if you want to take advantage of this offer, use the link in the description box down below and use the promo code Mike at checkout. Now, if we come over and look at the dollar this week really didn't do a whole lot. Just a lot of back and forth. MACD indicator looks like it may want to firm up, and we can see we never made it all the way up here towards the resistance level. Are we going to continue to see the dollar selling this week? Because we do have some news that could move the dollar in a big way out here this week. And speaking of the dollar, what is gold out here doing? We see gold has come down towards almost a 78% Fibonacci level. We came in right into this distribution area of the profile. If we start to bounce, look for the gold to come back towards all-time highs, and we'll probably go ahead and break that and run all the way up here towards the ABC completion at 25.35. If we break the 78.6 Fibonacci retracement level, then I expect gold to come all the way back down here, retest these lows, and if we break it, watch for gold to flush into the minus development area of the composite profile. If we do not bounce here, the next area I'd look for is all the way down here at 22.11, which is the next high volume area on the composite profile. Then we come over and take a look at Bitcoin. Bitcoin is almost back at all-time highs. And let me know in the comment section down below, do you guys think Bitcoin is going to make it back to all-time highs? Because if we look at what Trump had to say, Trump proposes strategic national crypto stockpile. Never sell your Bitcoin is what that article says. Now, if indeed we're gonna have a strategic national crypto stockpile, what is that gonna mean out there for the Bitcoin price? Is Bitcoin gonna go rocketing to the moon? So if we come over and look at the fear and greed index, we can see we're back in neutral territory from fear. We're sitting at 45. Will the bulls be able to gain enough momentum to push us back over into greedy territory? And as we come over and look at the investor sentiment survey, we had a bullish reading that actually dropped substantially. It came in at 43.2, previously 52.7. And if you actually look, the bears definitely creeped up. This week, are we going to see the bulls step back in again at the next reading? Or have the bulls been scarred and now they're basically scared, wishing that they would have sold out their stocks at much higher prices? We look at the Dow Jones. Is it really far-fetched to think the Dow Jones could make another run up towards all-time highs? You can see the Dow basically retrace to the 50% Fibonacci level. Small caps have absolutely been on fire. And you can see we've had this move up. We came down to the 38% retracement. So we have a bull flag pattern. Is this about to resolve itself to the upside? We know all year long, the IWM, the Russell 2000, the small caps have been extremely weak. And now the small caps are finally catching their stride. Now we come over and look at the QQQs. Notice we've almost hit our ABC projection down here at 454.53. We might have actually hit it out there in pre-market or after hours. And let's not forget, we do have a gap above us, but when we look below us, we have quite a bit of volume that has been built down below us. Now, if we were to measure from all-time high down to this recent low, that is about a 9.5% drop on the QQQs. For the NASDAQ futures, it's just over 10%. We look at the MACD indicator. It looks extremely weak at this point, but I want you guys to focus on the candle from Friday. Notice the high was lower than the high from Thursday. The low was higher than the low out here from Thursday, which means we have an inside day. So what do we expect? I expect a breakout or breakdown from this pattern. And you know what? Anybody that was buying on Friday or even late Thursday, guess where they most likely have their stops? Could we potentially see the market dip down one more time, go ahead and collect those stop loss orders before ultimately trying to bounce back up? One of the areas I will be looking for a bounce is about 470.36, then up here towards gap resistance, and then maybe all the way up here for the gap to get filled. We look out here on the 1 hour chart, you can see the MACD indicator has already had a bullish cross, and even on the 4 hour chart, you can see it's trying to firm up here just a bit. On the 30-minute chart, the MACD indicator has already been working itself off of the lows, and this is a warning sign. I want you guys to pay very close attention. If the Qs stay down here at these lower levels and the MACD indicator gets back towards the zero line, watch out. That could be nothing more than a recharge point to see the Qs come right back down and essentially break those lows. And you might say, Mike, there's no way that could happen. Well, if we look at the economic counter for this week, we really have nothing on deck for Monday. We come over here, we look on Tuesday, we have consumer confidence, we have the JOLTS job openings, and then on Tuesday, later on, the BOJ has their monetary policy statement. Then on Wednesday, what do we see? 8:15, we start off with ADP non-farm employment change. Then at 8:30, we have employment cost index quarter over quarter. 9:45, we have Chicago PMI. 10 a.m., we have pending home sales. Then at 2 p.m., we have the FOMC statement. Then Jay Powell is going to be taking the podium at 2:30. Now, this could have a huge impact on the dollar come Wednesday. However, we are not out of the woods after that. On Thursday, the UK has their interest rate decision. We have our weekly unemployment claims. We have the final manufacturing PMI numbers. We have ISM manufacturing PMI numbers. Then on Friday is going to be another big one. Are we finally going to see the non-farm employment change actually start to show signs of weakening? Or is it going to be another blowout number? And on Friday, we do want to look for the revisions. Do they revise the jobs lower once again? Let me know your thoughts in the comment section down below. Now, if we come over and look at the NASDAQ futures, you can see where did we come up to on Friday? We came right here towards the high volume area, which we talked about in Friday morning's video, which I drop a video each day before the stock market is open, which is another reason you guys want to make sure you're subscribed to the channel. When we look at this, we have value area low, which closed right below it. Now, from a weekly standpoint, value area low is going to come in at 19,200.25. Point of control is miles above us at 19,962.50, and value area high will come in at 20,084.50. Now, if I were to zoom this out a little bit, I want you guys to think, all right, where has the most volume been transacted on this chart? Right here, right about 18,551. Do we flush down there this week? We have many catalysts that could actually push the markets lower, but we also have a lot of catalysts that could potentially push the markets higher. Here's going to be a very easy way to approach it. If we're trading above value area low, I want to look for some upside testing. I want to see, can we get back within this minus development area? That minus development area is going to be anywhere from 19,420 up here to about 19,661. If we can break above that, then we have a shot of running back up here towards the high volume area, aka the point of control from last week. Now, one thing I want you guys to also focus on is a basic structure breakdown point. Candle wick to the candle body. Notice when we broke it, we have failed to come back and test it, and that is right on the edge of that minus development area. Now, normally the market will come back and test this price point. Is it going to be the news this week that brings us there, or do we come up and test that level and then Jay Powell basically sinks the ship once again? We come over and look at the daily profiles. On Friday, what do we form? A D as in dog shaped profile, which also signifies we're likely going to get a breakout or breakdown from this pattern. Notice the top of the profile was lower than the high from Thursday. The low was higher than the low from Thursday, which means we're setting up for a breakout or breakdown pattern. And then we had the consolidation form as well. Now, if we look at this, we can see that value area high will come in at 19,194.75. The point of control will come in at 19,170.25. Value area low will come in at 19,083.25. Now, if we start breaking below value area low, I want you guys to focus on this minus development area right here on the profile. That comes in at 19,036.50. As we come into that area, do we start to bounce back up? Meaning, does the market try to shake out some of the longs and try to entice people to jump on the short side and we reject from that level? If we break through this minus development area, then I'd be looking for a retest of the wick over here and then a retest from the lows out here from Thursday. Anything below that price point, however, we really got to be open to the idea that we could flush all the way down towards that high volume area on the composite profile. Now, as we come over and look at the SPY, what do we see? Well, on Friday, we did have a bullish day. We're up 6 points, up 1.12%. However, the MACD indicator looks horrible at this moment. We have a bearish separation of the two lines. They're at about a 45-degree angle on the way down, maybe a little bit more than 45 degrees. And we're going to see, do we start to firm up? On the 4-hour chart, we're starting to see the MACD indicator trying to firm up here a bit. The 1-hour chart, we already have the separation of the two lines. Then as we come over and look at the 30-minute chart, this is a warning sign. You can see all the consolidation that has been taking place. When the MACD indicator gets back towards the zero line, if we're still down here near these levels, we got to be very vigilant. We can simply see the market flush down below those lows, and then we'll see, do they essentially just sweep the stops and then bring it back up, potentially coming up towards some of these minus development areas and even up trying to fill the gap this week. Then as we come over and look at the weekly profiles, now this is a little bit different than the NASDAQ. We can see the S&P was actually able to close above value area low on the weekly chart. Now, value area low will come in at 5485.75. The point of control is way up here at 5610.75. Value area high will be 5629.25. Now, how do I want to play this? As long as we're above value area low, I want to look for higher prices. I want to see, can we come back up here and retest this high volume area? Let's not forget, this whole area of the profile is very poor market structure, which means the market's probably going to come back and try to auction in this area. If we can get above here, then I'll be looking for the gap from last week intraday to come back and get tested, point of control, and then value area high. And I'll be very amazed if we can actually go back and undo all of last week this week. Again, we have the news catalyst where that could take place, but we want to be very open-minded to both sides of the trade. As we come over and look at the volume profile levels, we have value area low on the daily, 5477.00. The point of control is going to be 5500.00. Value area high will be 5502.00. Now, one thing to note, if we open up Sunday night and we break value area high and we start coming down, then I simply want to target the point of control. I then would want to target this distribution area on the profile for an additional target, 5493.25. Then down here towards value area low. Anything below value area low, we got to be open to the idea of a retest from the lows from Thursday. And then we'll see, do we sweep any stop loss orders that are sitting below these lows and then ultimately start coming back up? Or do we continue to flush lower? And where might some of those lower prices be? Well, if we look below us, notice the next area where we have a lot of volume would be about 53.85. That is roughly a little more than 100 points lower. Now, can we do that in 1 week? Yes. Normally, we have more than 100-point range weeks out here for the S&P, and this week should be no different. Now, you can also see that we should set up some type of ABC pattern on the way up. And the reason why I say this is we have a 5-wave pattern on the way down. 1, 2, 3, 4, 5, which normally after that, we set up an ABC correction on the way up. Will it be enough to go ahead and fill the gap that we saw out here from last week, bringing us all the way to 5602.50? Well, we need to take it one day at a time. Are we above or below the key volume profile levels in the market? And if you guys want to learn how to trade double bottoms using order flow, make sure to watch this video right here.